everyone, this is Anushka Jain, your mentor for ACCA exams. In this video, I am going to discuss the question from December 24 mock exam of performance management paper. The question is Healthy Feet Company. I would request you to please log into your practice platform and open up question number 33. Let's begin. Healthy Feet Company, HF Company, is a family owned shoe manufacturing business that is well known for its handmade work shoes, which they claim to be safer and more comfortable as compared to other work shoes in the market. Given the labor intensive manufacturing environment, it is common to expect some learning curve effects whenever HF Company is launching a new design of work shoe. HF Company is planning to roll out a newly designed work shoe, Comfort, with three different sizes SML in the upcoming quarter. The following information has been extracted from the standard cost card. Size SML, and we have the selling price per pair 162, 165, 180. Direct material cost per pair is 80, 85, 90. Variable conversion cost per pair is $50 per hour multiplied with the standard labor hours per pair, and fixed overhead allocated per pair is $12 per pair. As it is likely that an estimated learning curve effect will appear alongside the production, the management accountant has agreed to a standard learning rate of 75%, with the estimated time spent in making the first pair of shoes being at 3 hours. An estimate of the labor hours based on this information has been given below. So they have given you the cumulative output 456, cumulative average hours per pair, and cumulative hours. The standard labor hours per pair has been agreed as the time spent in producing the fifth pair of shoes. At the end of the quarter, cost and sales information for all three sizes of the work shoes are as follows. So they've given you the actual data, actual variable cost, sales, actual sales, budgeted sales for the three different sizes. HF Company adopts marginal costing for output valuation. Okay. So let's take a look at the question now. The question is calculate the standard contribution per pair for each of the three sizes of the work shoe. So let's take a look at the answer now, and I will explain you how to solve as well. So we have to find out the standard contribution per share. I would request you to please give a heading to your answer in section C. It is really good to get you some marks. Okay, just that's a good impression in the eyes of the examiner. So size SML, the selling prices were given to us 162, 165 and 180. Then we have to reduce variable cost. Okay, we have to reduce variable cost. So variable cost comprises of material cost and conversion cost. What is conversion cost? Conversion cost refers to labor cost plus the other direct expenses. Now, direct material cost was given to us as 80, 85 and 90. Now, conversion cost is what is tricky. So for that, we will do a note and always specify this, that if you're doing some calculation in a note, mention it like this. Maybe note 1 if you have given a note number. Okay, it's like that. And you may write it like this, but do the calculation neatly so that the examiner is able to follow your calculations. So cumulative hours for 5 pairs of shoes was given as 7.7. And cumulative hours for 4 pairs of shoes was given as 6.76. So can we say that hours for the fifth pair of shoes, okay, if it is cumulative hours for 4, if it is for 5 pairs of shoes, so that is the hours for the fifth pair of shoes is 0.94. This is going to be the standard labor hours for each pair of shoes. Okay. Now, conversion cost per hour is 50. This was given to us in the question. This is per hour. And now we know that each unit is gonna take 0.94 hours. So can I say conversion cost per pair of shoes will be 50 into 0.94. That is 47. So conversion cost will be 47 and you can link it. For all the sizes S, M and L, the conversion cost would be 47, and that gives you a contribution of 162 minus 80 minus 47, that is 35 for size S, 33 for size M, and 43 for size L. Okay, and now we are going to come to the next question, and that is question number 34, which is also linked to the same scenario. So let's move. Next question is, for each size of the above, calculate the following variances for the quarter: sales price variance, sales mix variance, and sales quantity variance. Okay, so let's take a look at it. Variance analysis is one of the favorite topics of section C questions, let me tell you. It's very frequently asked, so I would request you to please be very, very careful and understand the concept properly. Since the company is using marginal costing, it was given in the last line and I highlighted it also while reading the question with you. Since the company uses marginal costing, therefore, the rate for sales volume variances would be contribution per unit. Okay, it would be contribution per unit. So let's do it. Now, standard quantity, rate, and amount. This is a standard layout I follow for solving any question on variance analysis, be it material variance, be it labor variance, be it fixed overhead variance, be it sales price variance. Any question that comes on variance analysis, please try to put it in this format so that it becomes very much easy to solve the questions. If you have prepared this table correctly, then 99% of the work is done. Rest 1% is only to put the formula into place. Okay, so let's prepare this table now. So standard quantity for size S, M and L was 60, 100 and 90. This is given to us in the question directly. Okay, budgeted sales. Basically, this is the budgeted sales, 60, 100 and 90. Then as I told you, we have to use contribution per unit. So let's come to contribution per unit. We have the budgeted price 162, 165, 180, which we used in the earlier question also. So budgeted price. Then variable cost. This also I calculated in the previous question. So contribution is 35, 33 and 43. Now I just go up and link it. Please link wherever possible. Do not type the numbers if something is already calculated on the screen. So 35, 33 and 43. So that gives us a standard amount of quantity multiplied with rate, that is 2100, 3300 and 3870. Now my actual sales was also given in the question. 115, 75 and 110. So this was given in the question. And actual sales in dollars, okay, the sales value was also given 18,745, 12,000 and 20,000, 130. So can I say my actual price per pair of shoes will be 18,745 divided by 115, 12,000 divided by 75 and 20,130 divided by 110. So that gives me the actual price. Variable cost, actual was also given to us in the question. Okay. So if I reduce the variable cost, I get the contribution. Okay. Sales minus variable cost is the contribution. That is 30, 16, and 35. This is budgeted and this is actual contribution. Now let's move up. So I have the quantity, I have the actual contribution. So can I calculate the actual amount? 3450, 1200, and 3850. So this was pretty simple, right? I just did the table preparation for the standard and the actual part. Now there is one column in between, and that is actual in standard mix. What it means is total sale that you have done is of 300 units. Now you need to split this 300 units in the standard ratio, which is given to us over here, 60, 100, and 90. So what we do is, take a look at the formula. 300 I have to split, right? So 300 into 60 by 250. Then 300 into 100 by 250. Then 300 into 90 by 250. So that is the actual in standard mix. Okay. So now my table is ready. I just need to calculate the variances and very clearly just put the formula and link it with the above table. It is that simple. Once you have cracked making this table correctly, I'm telling you, your life is going to be sorted. So the formula for sales price variance is actual rate minus standard rate into actual quantity. So actual rate will be what? Actual rate, we are doing sales price variance. So be careful. I have to use sales price. Do not make the mistake of using contribution here as well. So sales price variance will be 163 actual price minus budgeted price of 162 multiplied with the actual quantity 115. Then similarly 160 minus 165 multiplied with actual quantity. Then 183 minus 180 multiplied with 110. So the total is 70. And if the number is coming positive, it means that there is a favorable variance. Okay. Next, you have to compute the split of sales volume variance, which is sales mix and sales quantity variance. So here, the formula is actual quantity minus actual quantity in standard mix multiplied with the standard rate. So I have the actual quantity 115 minus the actual quantity in standard mix multiplied with standard rate. That is 35. Should we not use price here? No. As I mentioned above, the company is using marginal costing, and therefore for sales volume variances, you're going to be using contribution per unit. Okay. So the formula for mix, that means what is the variance which is arising because you changed the mix. So that means it was supposed to be sold in a certain ratio, but you actually sold in some other ratio. So that is why you're computing actual quantity with the actual quantity in standard mix multiplied with the standard rate. Now I'll just drag across the formula. If you just copy paste the formula down, it just updates itself with the respective size, and then you sum it up to get 106 favorable variance. Okay. And then the last variance, that is sales quantity variance. Sales quantity variance. The formula is actual quantity in standard mix minus the standard quantity. That means what is the variance because of less quantity or more quantity being sold. So actual quantity in standard mix is 72 minus 60 into 35. You multiply with the standard rate for the both mix and quantity variance. 120 minus 100 into 33. 108 minus 90 into 43. And if you sum it up, you get 1854 positive. Therefore, there is a favorable variance. And that, my friends, gives you total 9 marks for each of these variances are carrying 3 marks. And just because you prepared the table, you were able to solve all these so easily. Okay. So I hope you learned the concept of variance analysis and computation of contribution correctly in this video. If you did, please like the video and hit the subscribe button, as I'm uploading a lot of such informative videos for the ACCA students. Thank you so much. Please take care.